So today we're going to talk about the dip that is currently going on with a lot of UK stocks out there. We're actually seeing it in the US stocks, but particularly the UK stocks so far this year have just been a little bit in the red, haven't they? So we'll talk about the dip that's currently going on and the dip that was caused today, and talk about some opportunities that could potentially be in the market. I even went to the extreme extent of actually drawing a picture for you guys today as well. So anyway, let's get on to what's happening with the stock market. So overall, the big thing that is pushing the UK market down today was the inflation data. And in general, I think the market has been a little bit slumpy so far this year because the market was getting very excited with inflation coming down and the potential rate of cuts coming in, and obviously at the moment there's kind of been a bit of a reassess going on of actually them cuts that we thought we were going to get in March, April, May time. We're probably not going to get those, and I think as well with the inflation data coming out, that's also helped that point of view. Now the UK inflation data did go up to 4% versus the 3.8 consensus, so it did look a little higher than what was expected. But I've got to say, I don't know who is forecasting these figures at the moment for the UK inflation, but they are just terribly all over the place. I said on Monday's video that they are just all over the place. I mean, last month we were expecting 4.4 and it came in at 3.9, and this time we ended up with a 3.8 consensus and ended up at 4%. So the UK forecasting is just absolutely shocking at the moment. But the big thing you got to realise is that last month we did go from 4.6 to 3.9. That's quite a big drop. So the fact that we have only gone up 0.1% from last month isn't that bad. You know, there is going to be months where we are going to see it come down slower now because we are at a less higher number. That's going to happen. The other thing you got to bear in mind as well is that obviously the energy price cap situation will start kicking in January, so that will cause a little bit of an issue in the next month. But after that, you know, the trend is still there. That's the important thing. The trend is still there. So even though it was a little bit disappointing on the number point of view, it's still in a decent place in my opinion. So the market is kind of throwing its toys out the pram a little bit because it was getting excited about the rate cuts happening a little bit quicker, and now it's like, oh, maybe they're not happening, and the inflation data as well is supporting that it's maybe not coming down as quick as we thought it would, but it's still going down in the right direction. So I won't worry about that too much. What it is doing though is it's creating opportunities in the market, and there's been a few. I mean, Card Factory, I was going to make a video on this, I never got around to it, so I'll stick it into today's video. Down 13%, 8% down this year, down 13% in the last 5 days, having a big pullback, and they actually came out with a trading update. We got the trading update that we were looking for, and it was very good. The total sales was up 10%. That's very good for a company that is at 6 times earnings. I've seen a few people make a big deal out of the online sales. I think that makes up like 3% of the revenue. Don't worry about that. If you're going for online sales, you go to Moonpig, you don't go to Card Factory. So that's not a key thing. Big partnerships that we want to see as well. And also they said that on the outlook point of view, given the strength of performance in the year to date, the board expects to deliver full year adjusted profit before tax, excluding one-off items, at the top of the range of the market expectations. Once again, absolutely smashing it, and that's what we want to see. So we're seeing great revenue performance and once again profit ahead of expectations, and yet we saw a drop on Card Factory, down 9%, which is just crazy. I don't know why it's dropping. And you know, 6 times earnings for a company that's doing these numbers. The balance sheet is getting stronger and stronger. By the end of this year, I mean, it says on here, Simple Wall Street, the debt's going to be around 98 million, but it's lower than that. It's already down at 70 something million, and then they've got one more payment they have to pay off, and then they can go back to a dividend. So you're going to have a company at 6 times earnings, balance sheet in a lot healthier place than where it was. You're going to collect a dividend. I mean, it's one of those that you look at the market and you go, why is it going down? It doesn't make sense to go down. So I thought this was a very good opportunity that happened as well this week. S4 Capital, I'll just let you guys know, they have confirmed their trading statement. So I said that they are rumoured to report, I think it was today, but there's no confirmation with an RNS, and they normally do that. We have now got the RNS saying that they are going to do a trading statement on Monday, the 22nd of January. We don't really have to wait too long for it. I want to see a good update from them. Now, I think they've got to do a good update. I surely can't see another profit warning. Key period. The big thing is, you know, managing that profitability, and hopefully they give a decent guidance, and we're in a good place. But we'll see what happens. JD Sports, I mean, it just continues to go down and down and down. You know, they do one profit warning, and I mean, I can't believe the way the market has reacted to that profit warning, because the profit warning wasn't even that bad. like when you look at the numbers, they're still going to be generating, was it 900 million profit before tax or something on a 5 billion company, and still growing at like 8% year over year. Like, yeah, it was a little bit of a miss, but let's be honest, it's still fantastic numbers. Yet the shares have absolutely tanked, 37% since that time frame, and it's now at the levels that it was nearly at during the peak fear of 2022. You get into the time frame where it's nearly the same price as when it was in the CV dip. It's lower than where it was before 2020 once again, and it's just like, come on, give us a break, guys. I mean, it's now trading at, I think it's 8 times forward earnings. It's just absolutely insane. And the crazy thing as well is when you look at Foot Locker, I mean, Foot Locker is, since it's had hit its profit warning, it is up in that time frame, and JD is down. And the crazy thing is when you look at Foot Locker, they're currently trading at 12 times forward earnings. JD is at 8 times forward earnings, and it still grew 8% this year. And as well as that, Foot Locker was declining sales of, I can't even remember what Foot Locker's sales were declining in the recent quarter, 8%, and net income was down 70%. It just, once again, Card Factory, opportunity in my opinion, big disconnect there from the valuation and the numbers. JD Sports, big, obviously, disappointed about the profit warning, but it's not that big of an issue when you look at the valuation. Once again, a good opportunity there. Aviva, I've been desperate to buy more shares in Aviva. I bought it and it started rolling up and up and up. I averaged up, and then eventually I got to the point where I just can't buy anymore. It is starting to flatline and have a bit of a dip, so we'll see if there's any weakness there. 7% dividend yield, but same again, I look at this one and I'm thinking, a 7% dividend yield for a company that's putting in decent financials. Like, their last update was pretty good. You look at the quarterly update there, pretty impressive numbers. And the big thing with Aviva is that there was rumours of a bid of £6. So you're thinking, well, if there's a bid of £6 on Aviva, surely that's kind of your basement figure that the stock kind of trades at. And it hasn't really happened, and even if not, maybe even a little bit of a rise, and it just kind of hasn't happened. So yeah, I'm looking at Viva, and this is one that I wanted to have kind of double a position that I have, and if I'm going to have an opportunity here right now, I'm going to take it. Last one I want to talk about is Alibaba. Once again, yesterday, breaking towards 52-week lows. You can see here 52-week lows is $67, and the low today was $67.26. The 52-week low is right there, and once again, you're looking at this here. I mean, it's updated at 9 times earnings. On a forward basis, it's down at 7 times earnings, and it just keeps going lower and lower. And the crazy thing with like Alibaba and a few of these Chinese stocks now, a lot of these Chinese stocks are putting the best financials I've seen them do for like 3 years now. And you look at the financials, I mean, the growth, revenue's there, net income's there. Everyone, we talk about a moat. Alibaba's a moat. When you look at China, and if you ever go to China or you live in China, the amount of times that you use them apps that are owned by Alibaba in China, you're using 2 or 3 a day. It's got one of the best moats in China. But yet, you look at the financials are recovering. You're seeing the net income go back up, the revenue go back up, they're paying a dividend, they're buying back a ton of shares. They're doing everything right, and they're doing the best financials you've seen. And I'm a big preacher on this channel. I say that as long as you buy a company that is growing profit and revenue, and you get it at a decent valuation, you will be rewarded eventually for it. But I tell you, if you're an Alibaba shareholder, your patience is getting tested a little bit. You're seeing this stock drop to 52 close after putting probably its best financials in for the last 3 years, and it just keeps going on lower. I mean, you just don't know how long it can go on for. At some point you feel like the share price has to start reflecting the financials, but we'll see when that is. But I was really surprised once again to see this one have a really tough day. And I know we were talking about UK stocks, but I just wanted to sneak Alibaba in there because I think it was worth a mention that it just keeps going lower and lower at the moment. But yeah, that's where we're at anyway. So yeah, just a quick update, just talking about some stocks that I'm seeing a big disconnect between the valuation and the financials, and just wanted to give Alibaba a shout out that I just can't believe how low that just keeps going, even though the financials have vastly improved from where they were 1 or 2 years ago anyway. So yeah, just thought I'd do a quick video just updating you guys with some opportunities that I'm seeing out there. And yeah, thanks for watching guys, and I'll see you in a bit.